So I've been asked a question recently: how much of my business numbers should I share with the team? Which is a great question. And once I sort of start prompting a conversation with people around how to engage their team around increasing efficiencies and productivity and particularly gross profit, that question tends to pop up. So I thought today in this video what I could do is give you an answer to that question and then explain how, or one way to actually share the numbers of your business with your team. So in answer to the initial question, should I share the numbers with my team? Because I'm sure they think that I'm making a mozza. You know, they see 100,000 come into the bank account from a job or over a month, and they probably think that I'm getting 50% of that and I'm raking it in. And we know as business owners it's not quite true. In fact, it could be completely the opposite. And my response to it, if you don't share at least some of the numbers or how your business operates or what the money-making model of your business is, they're going to make it up. And if they're, assuming that, you're raking it in, got plenty of profitability and living the high life, and that's not true, it's your responsibility to share with them, in essence, how your business generates income, how it creates gross profit, how it makes net profit, and also how it also loses profitability and the impact of that on you personally as well. So my thoughts are, if you want to engage your team in helping you run a more efficient, more productive, more profitable business, you've got to share with them how it makes the money. So I've put up here some numbers that you may wish to use, and or maybe the example. It's one way, it's not the only way. However, I do know from personal experience in our business, we share openly the numbers of the business and unashamedly talk about, well, how, what happens when we do make profit, what we do with that profit, and also the impact when we don't make profit and where that has to be, supported by, and where that is as well. So let me share with you one way to discuss with your team how to share the money-making model of your business. Now, these are round figures. You don't have to use $100,000. You could use $1 million, you could use 10, you could use $1, because the numbers are pretty much the same. So let's say, and again, this is going to vary based on whether you're in construction or whether you're doing more service and maintenance, more reactive type work. So go with the flow, listen to me out, and then, take this and use it as an example in your business. So one of the ways that I did this was with one of our clients earlier in the year, and in a team training session, I ran through essentially their money-making model because I wanted to engage them in. We were talking about key performance indicators. Now, that's a dirty word, I think, but it's about what winning looks like in your business. And so I went through a very similar example to what we've got here. Now, I said that, and the words you want to get your team familiar with are also the same as what we've got up here as well. So we talk about income, and income is incoming sales revenue. And there's a number of different words we could utilize for that, but I think income is incoming. Now, that is top line revenue or sales income. Now, to generate that income, you have to actually sell something first. And that's what we call the cost of goods sold. Now, in your programs with us, you would have learned about what that is, but the cost of goods sold, and the two main things that you will sell in your business is materials and labor. Now, the labor could be employees that are on your books, or they could be subcontractors that you bring in to help you do the work. They're the two main costs, but you may also want to share the other things that add to this cost of doing the work. And that could be things like waste removal, fees, permits, equipment hire, all the other smaller costs, but over time can add up if the business is quite inefficient. So in this situation, I've used an example that $50,000 of that incoming $100,000 has gone to generating that revenue. So it really doesn't even count. And what that leaves is what's called the gross profit of $50,000, or we call that the GP. And you may use that language in your business, and that's also a percentage. So in this situation, 50,000 out of 100,000 is a 50% gross profit. Now that gross profit, if you've heard us talk about this in the sessions, is the real income. The top income doesn't even matter. It's what you keep after all the costs involved in generating that top line revenue. So that's that gross profit. That's the real income. And that's the figure that you want your team to be focused on helping to improve. Now, once we've got that gross profit, we then have to take out and subtract all of the overheads. Now, remember, overheads is that term for what's hanging over your head every single month as far as costs go. So you can run through with your team what these actually are. So for example, it could be your insurances. It could be motor vehicle registrations. It is, your work cover. It also comes into your power, your phone, your internet, your administration wages. If you've got people in the office such as estimators or maybe supervisors that may be a bit out on site and also in the office as well, they all have to be factored in. If you're the business owner, some of your salary or maybe all of your salary is factored into the overhead. So these need to be paid every month regardless. So again, in this example, I've got $40,000 every month need to be paid out, which leaves a net profit of $10,000, or in this situation, 10%. Now, that net profit, as you know, you then need to pay something called income tax on. So a percentage of that will then go to the government, and let's say round figures, it's between 28 and 30%. So that leaves you with about $8,000. Now, that's if things have gone considerably well. We obviously like to help you get that higher. But then I also say, well, you need to share with your team what you do with that net profit, because it doesn't go straight into your pockets or your bank account personally. As you know, on paper, net profit can be significantly different to what we call cash flow or liquidity in your company. Now, if you want to be an innovative company and you want to continue to evolve and create a better business than you had yesterday and a better place for your employees to work, what do you do with that net profit? That's right, you reinvest it back into the company. So if you share some very simple figures like this with your business team and share with them that if there is a profit, that then is reinvested into the company. Because remember, marketing costs are also part of this overhead. You're doing that every single month. But you also want to share that if it happens to blow out and it goes not into the black but goes into the red, who then has to pay that? Who has to support the business? And in some cases, who has supported the business ongoing for many, many months or many, many years in certain circumstances. So that in essence is a very simple way to share the numbers. But you may also want to do this. You may want to show with them what that difference could be, because if you want to create a long-term sustainable company, if you shifted a couple of these numbers. So without looking at generating extra income, which I know may or may not be your goal, but your team, particularly your production team, are the ones that can help you with efficiencies and improve your gross profit, or by reducing the cost of goods sold. So what about in this example, if you said, listen, if we got a little bit more efficient? Now, you know how you can improve efficiencies in your business, and if you've done the work in our sessions, you'll have looked through the workbook with the ideas. But some simple things could be, planning ahead, making sure you've got limited downtime between jobs. You've got all your material purchases worked out in advance. You start on time, you finish on time. There's a minimal breakdown in communication between the office and what happens on site. You've got someone monitoring the hours that have been allocated to each job. You've got someone who's held accountable that if 100 hours are allocated to a job, that the team know that where they are in accordance with that, because you can't measure and improve anything that you're not really, tracking. So let's have a look. In this situation, if the team got effective and we're able to reduce the cost of doing the work, which could, in this situation, bring it down to $47,000. Just a change there, which means at this end, our GP becomes 53,000. So 53%. Now in the office, your team, your admin team could be responsible for helping you monitor overheads. Like every 3 months, make sure that you're getting the best deal on your power and your phone, maybe your internet. Maybe it's every 6 months. Review your insurances every 6 months, 6 to 12 months as well. making sure that you're getting the best use of your administration team and that your overheads are being utilised effectively. So in this situation, what about we reduced our overheads? And we got these down to $38,000 in a month. All of a sudden, this $10,000 becomes $15,000. Now, that over time, you extrapolate it over a year and it can be a significant difference. Now, with your team, if you shared with them a more profitable business is a healthier business, it allows you to sustain slower months, slight corrections in the marketplace, and depending on which part of Australia or New Zealand that you're in, also there could be, climate affected situations. You might have extended periods of cold, wet, depending where you are and how that interrupts your workplace as well. So let me show you also what could happen on the other side. So you need to want to share with your team what happens if the other thing happens, if it blows out. So all of a sudden, you have a job that was supposed to be done in 100 hours, and all of a sudden, it doesn't take 100 hours, it takes 130 hours. So it goes the other way. So in this particular situation, cost of goods are now $53,000, which reduces our gross profit to $47,000. Okay, only takes one job, as you know, if it's a larger construction job particularly, or regular little lapses of concentration. For example, if you're on service and maintenance and you've got a lot of downtime between jobs, or there's a lot of travel time that you can't bill for, or the jobs haven't been scheduled effectively, one of the things we recommend in service and maintenance is that you look at the capacity of your team. Which percentage of those 38 to 40 hours every week are billable? Okay, and aim to get that as high as you possibly can, because every hour that you can't charge for, remember, your gross profit decreases. So we've got now 53, we've got a 47%. Now in this situation, what would happen if all of a sudden there was a blowout in our overheads? We didn't see some costs coming up. We overspent on marketing because we were having a slow time in the business, and all of a sudden the $40,000 became $42,000. And that's only a small increase, remember. Then all of a sudden this becomes now 42, it becomes a $5,000 net profit. Take the tax component out of that, becomes 3.5, and if that's some of that's still in someone else's bank account, then your cash flow is affected as well. Remember, what I see is most trade businesses are only one bad month away from having to take some significant action to rectify their business. In some cases, may even have them to close the doors. Now, if you can engage your team, and remember, context gives meaning to the content. So rather than just saying, hey, I'm just going to share with you the numbers of the business, you may want to create a game around this and say, what I'd love to do is engage us all in running a more profitable and effective business. And if we can do that sustainably over time, I'd love to look at a way to reward the team with it as well. So sometimes that goes into the conversation about bonuses and incentives. I'm not a big fan of doing that on an individual basis. It needs to be a team goal, because remember, the team can affect gross profit as well as overheads as well, and it needs to be done over a sustainable period of time rather than just doing it on a month-by-month basis. You need to look at what are the benefits doing it over at least 3 months, 6 months, maybe even a 12-month period. And what I see is some of the most successful companies do it on a 12-month period, so you've got people engaged in a productive workplace over that 12-month period. But again, that's another conversation. So I trust this has been useful for you. Again, I really believe in transparency with your business. You may want to just share particularly gross profit and what the overheads are. They can work out the rest, but you don't want to necessarily leave them in the dark, because they're going to be talking about it or making it up. So better off being clear, authentic and real with them. And particularly those A-grade team players that we talk about hiring in your team will love hearing about how the business works and will want to contribute to you running a more efficient, productive and profitable business. I trust that's been of value. I look forward to hearing how it goes.